Okay, so this is slide number one. So we are welcome everything here in this page. We have an agenda that we are going to go through. We will discuss concepts, do group individual activities. I'm not sure how it's going to go online, but we're supposed to do that individual activities and have time for your question. Like I said, we're going to be 10-minute break during the class. And if you have any experience or knowledge in some aspects or materials, please share your ideas with the class. A ground rule, it's going to be a lot of ground rules. So these are pretty much it. One of the best way to learn is from one another. So please share if you have a knowledge in anything. Also, you might be aware of some method that has worked well for you or some pitfall to avoid. Your class contribution will enhance your learning experience. If something is not clear, just please ask questions. Introductions, like share, introduce me. I am a credit analyst at the Pacific Premier Bank. I am a IRS certified tax preparer, so I just got my recertification this year. I'm ready to prepare taxes for the following year. It's going to be very difficult because of COVID. It's a lot of loans that has been forgiven for the businesses as well as for the individual. So that's going to be a little rocky this year. We had so much income that support our community that IRS has forgiven. So that's going to be a little interesting this year, and I'm very excited. I know we cannot let everyone share to introduce themselves, so I think we're just going to move forward. Is that correct?
Yes, please.
Okay, perfect. One of the objectives, after completing this training, you will be able to identify the federal, state, and local taxes reporting requirements for a small business and its owner and establish a plan to account and pay them. Identify methods for researching the local county and licensing requirements for small businesses. So I'm not sure if one of you know what or want to learn about tax planning and reporting. So what do you know? I know you guys know a lot about taxes, but maybe not in detail. So I'm not sure how we can open the line for this question, but Cheryl, can you help me on this?
Yeah, so I think if any of you would like to unmute yourself, you can do that. And if you would just like to share kind of what you know already or what you will want to learn today, that's probably a great place to start. And I've made it so that you can unmute yourselves if you'd like. So someone said that they would love to learn best practices for tax planning. So great, you're in the right spot.
Awesome. We also have a pre-test to begin the page, on page 10 of your participant guide. So if you just go there, I'm not sure if I can have it in this. But we do have a questionnaire. I'm just going to go to the page number 9 and then share this with you. So this is the one of the page 9 that we have that you can actually put your name and the date. And so you can go to number 1, 2, and 3. Just let us know before training what's your knowledge about each question, each number here. And then let us know if you know, and then after the training, we can fulfill this part. Then after that, there is a pre-test that you can go ahead right now and complete for us and see if you can, if you know the answers. So after the training, we will have the same test as a post-test. So we will see your answers if you learned something from this training or you have something that you knew it before, so we can compare both tests.
So Tuta, we also have a couple of other statements. How to find a good tax preparer. Do you know what items can be deducted for a business? Someone would like to learn what they can do to pay less taxes. I think that's always we'll look at that from a business efficiency standpoint, right? I think that's a pretty universal desire there. Can you explain a write-off? That was the other thing. And someone else said, I know nothing. So this will be a great presentation for you, Jessica.
Yes. So we will go over each question that you have and more in just in a minute. There are different. So one of the questions I catch, it says which one what's the best account to have. So there are a lot of, you can be your account by yourself if you don't want to hire anyone. It depends. If you want to hire one, that's fine, but you don't have to. There are a lot of softwares that you can actually buy it and have it for your own, and you can actually complete your taxes by yourself and control all the expenses and revenues via that system. So it's not going to cost you much. I mean, everyone can do it. It just depends on you, what you want to choose. I know accounting is very important to have for the company, but if you can, I mean, a lot of people do it too. So if you can have a very good system that can track those for you, you can control by yourself, so you don't have to pay any accounting. There are a lot of sources in IRS website that they can give you a guide which way you should control your account. And so there are two methods we will go over in this presentation. There are two kinds of methods that you can use for accounting on your tax returns for your company. So it depends on you which one you choose. There are some limitations on different companies that the IRS does not let you use one of the methods. There are cash methods of accounting and then accrual. So it depends on your company size, and if it depends on your what you want to choose, which method. We will go over the presentation and you will see. But having an accounting in your company is very important, either with a system or you have a company that control your financials. So it just, you're going to choose in the end. There are no wrong or right, but to avoid a lot of expenses for you, you might just start with yourself. And I mean, there are a lot of resources in IRS that they can give you a guide. You can also call a phone call and they can give you more information on it. You have questions, they're going to address it for you. There are a lot of things that you can actually do for your business by your own. You don't have to have anyone. So I'm not sure if you were able to, all of you were able to go to the instructor guide, page number 9, to fulfill before training, and you can put the information there. I'm not sure if you had done, but you can show us like later after the training, so we can complete the other part too. Pre-test, I'm not sure if all of you did it, but if not, then we will go after, but keep it that for your record for now, and we will go to the next page. Managing your tax obligation. Business owners need to be informed about paying tax obligation. As a small business owner, you generally will have the responsibility to pay taxes through the year. You know how to pay taxes. You need information about business accounting, the legal form of your business, and tax requirements. You'll need to find out how to establish your tax year. Some of the companies chose to have the end year on December 31st. Some of the companies chose to have the end year on the middle of the year. So let's say June or June 30th, or some of the companies that I've seen, they have September 30th. It depends. You can choose that date, but it has to be a full year. So you chose that part. Like I said, having a good accounting system will help you track income, expenses, and give you more clear information to calculate your taxes and file accurate tax form. So more importantly, you have to be able to plan ahead, manage and save your money, and pay your taxes on time. Primary business taxes. Business owners may pay several types of taxes: income taxes, self-employment tax, employment and unemployment taxes on employees, excess taxes, state, local taxes, and fees. So let's take a look at each of these plus several other taxes in detail. Income tax. Your income tax is based on net profit. Net profit is what your business, when deduct all, net profit is the income. I apologize, net profit, yeah. So net profit is calculated total sales minus the total expenses. So when you have sales and you have expenses, you have to deduct that expenses from your income, and that's your net profit. This is essentially determined by subtracting, of course, your business expenses from its income. Business expenses are those that are ordinary and necessary to operate the business. Sole proprietorship, partnerships, limited liability companies, and S corporations show their net profit on the owner's personal income tax forms, versus C corporations pay corporate income tax. Most states also charge income tax, as do many cities and countries. Then self-employment tax. Self-employment is when you are in a business for yourself, including part-time business, or carry on a trade or business as a sole proprietor. And on an independent contractor, you're generally considered by IRS to be self-employed. You may pay self-employment tax, also known as Social Security and Medicare taxes, if you are self-employed. You must pay self-employed tax if you're earning from self-employment, or if your earnings from, self-employment are $400 or more. Employment taxes. If you have employees, be aware that are several employment taxes. Some are paid by the employer, some are paid by employee, and some are shared. Employers withhold federal and state income tax from employees' wages. Employers withhold part of Social Security and Medicare taxes from the employee's wage and pay a matching amount. Also, employers generally pay federal and state unemployment insurance, which you report and pay it separately from other taxes. Employers pay into state disability program as well. There are a lot of employment taxes that you should pay as an employee. You cannot avoid some of them. Some of them are just you have to pay. It depends on the company, actually, how many employees you will have, but there are a lot of forms that you should file when you have employees as well. Excess taxes, usually you may pay excess taxes if you manufacture or sell certain products, operate certain kinds of business, or use kinds of equipment. For example, indoor training services pay excess taxes, or the business that operate heavy vehicles such as trucks or on highways. Sales taxes is about 45 states. Retail sellers are required to collect sales tax from customers. You then turn over the taxes you have to collect for the appropriate state agency following its collection process. Local taxes, these are just depending on your particular situation and location. You may be responsible for real estate and personal property taxes. Most cities and countries also requires business to acquire license and permit. Tax identification number. This is very important. This is very important to have as a business. So when you establish the business, you have to have a tax identification number known as a TIN number. In this case, when you have this number, the IRS is gonna process your returns. So this is very important for your business to have, and I highly recommend for you when you open a business to have a tax identification number. If you don't have this, if IRS find out about your business, they're gonna give you a big penalty, which is not good because it's gonna be a really high penalty. So I encourage everybody when you establish a business, have your TIN number set up. So of course, social security number for the business owner is very important too. So I know everybody have that, so that's important too. That's the social security number. We're going to be like a search source for the IRS to identify your taxes. And IN number is issued by the IRS to the sole proprietors, partnerships, and corporations. Federal income taxes. It depends on your business structure that is going to impact your income tax payments and the forms you are using when you file your taxes. For example, partnerships, sole proprietorship, S corporation, and limited liability companies are not taxed separately on a business profits. Instead, the profits pass through the business to their owners who report business income or losses on their personal tax returns. C corporation is the only type of the business that must pay its own income tax from the profit. So it's only one way of, it depends which kind of company you will have. So only C corporation is the only type of business that must pay its own income taxes on profit versus the others that they should not, the companies are not taxed separately on a business profit. Sole proprietorships. Profit and loss from the business sole proprietor Schedule C on your personal tax returns, or CEZ form on your personal tax return 1040. You'll list your income and expenses on Schedule C to determine your net profit. The net profit is listed on your tax return form 1040. Partnership, it's a form from IRS, which is 1065. That's for partnership companies. Partnership must file this annual information return to report the income, deduction, gains, and losses. The partnership also must furnish copies of Schedule K1, which is in the form 1065 to the partners. So it's going to show the partnership deductions and withdrawals. Also, it's going to show on the top the income of the revenues. Also, it's going to show the percentage of the ownership on the left side. So it's gonna say your business on the top, and then your name to each person. Let's say you have 10 people that are gonna be, K1s, the Schedule K1, so they all have to have that in the company. And then each time when you submit forms for yourself, you're gonna have that copy too, because K1 is very important for your personal tax returns too. So let's say you have a partnership somewhere and you need that K1 to have it for your records, because that's gonna show you how much you had distributions from that company and how much you contributed for that company. So it's going to show all the numbers there. That's very important to have it with your tax return. Save it for yourself, because that's very good source if you are going to try to get a loan to a bank. the bank is going to ask you, oh yeah, we need your personal tax returns, but then you have to have these schedules along with. So just keep it for a record. It's very important to have that Schedule K1 with you. S corporation. S corporation is income tax for, it's a form 1120S. So these forms are different. So IRS has, like, for personal tax returns, we do have 1040 form. That's why they divide the businesses as well too. So for the S corporation is form 1020S. So this is going to show the S corporation, and then this you're going to incorporate the income, losses, deduction, and credit through their shareholders for the federal tax purposes. So shareholders of a S corporation report the flow through the income and losses on their personal tax returns. That's what I just explained earlier. Corporation use the tax form 1120 versus the S corporation. The S corporation has 1120 S form, and this has without S. So this is only 1120 form. This is a regular corporation known as C Corp, is taxed and as a separate entity under the tax law. Income earned by a corporation is normally taxed at the corporate level, and the corporation must file Form 1011 each year to report his income. After the corporate income is taxes paid on the profits, and the distributions made to the stockholders are taxed again at the stockholders' tax rate and dividends. A limited liability company. The federal government does not recognize a limited liability company, LLC, as a classification for federal tax purposes. So this is the one that does not have, this one in the end does not have any form for the tax for the IRS, but you can use the same form as you can use for a sole proprietorship or a partnership or a S corporation. So when you have a limited liability company, you can use one of these forms, which is going to be the same for your company.
Doug, before we get into maybe diving into the participant guide, can I toss a couple of questions out to you that have come up in the chat? So one of the questions is, am I required to file taxes quarterly?
Not filed, but that's for your record. Actually, yes, I take it back. I apologize. You should have your quarterly tax returns for your records to keep track of your expenses and income, because that's very important for your company. If you do an audit quarterly, so you can have more picture about how much you actually have income and how much you have expenses, so you can control a little bit the expenses. So yeah, that's very important to have for your company.
Great. And then another question is, can you tell us more about health account deduction for SB?
Can you repeat again for me? I'm sorry.
Yeah, it says, can you tell us more about health account deductions for SB?
SB,
yeah.
So that's for small business.
Yes.
Health deductions. Yes. So health deductions, yeah. I'm not sure how much should I go on the details on that, because I don't want to make you confused. But it's very good to have that benefit for your company, because the more you contribute for employers, more it's going to cost for your expenses to be recorded on your books. So more expenses gonna it's gonna make you more looking good for your net profit. So having that on your company is very important, because in that case, the IRS will see that you also, give a lot of benefits to your employees. and your company, it's better for your net profit. So having more expenses on your company is very good because you will have to pay less for IRS in this case.
Great. And I've got a couple of questions here regarding LLCs. So number one from Lisa, I just launched my business LLC. I am already filing the monthly CDTFA taxes. For the LLC, I need to figure out what are considered startup costs. I would like to do my taxes myself.
I would suggest to go to IRS website and have more information on it, as well as call the phone number that is in IRS website for LLCs, because I don't want to give you like any advice right now because I'm not certified to do that. I don't want to give you the wrong, advice to do. So I think the best source to go is through the IRS. If you can go to IRS and there's a phone number you can call to give you more information about your LLC, because I don't want to take that responsibility to give you some wrong information.
Yeah, and some it might be also very, industry or business specific too. So you kind of want to, ask those questions on behalf of your individual business. So maybe just step back a little bit further on LLCs. Lizbeth says, I have an LLC. What is that? I was told to do it, so I did, but I have no clue how it helps my taxes.
Yeah, limited liability. They have limited just in ownership, not much for other things. LLC means that it's very, very small company. So it has partnership instead of having the chief officers, directors, CEOs, and stuff like that. So, I mean, limited liability is good. I'm not sure how much it's going to impact the versus taxes. I'm not sure. I cannot say it's a good idea or bad idea, but LLC usually are for more smaller companies that they don't want to be established as a corporation.
Okay. And just a couple more follow-ups on that, and then we can move on. It says, also, I never paid myself this year. Can I still do that, or did I miss my chance to be an employee if they have an LLC?
Yes.
Okay.
Yes, you can still have your W-2s for yourself, and then you can also, when you file for the business tax returns, you also have to file for yourself, which is gonna you're gonna have that W-2 too. So you're gonna claim the W-2 in your personal tax returns as well and file for your company. Even if you're an owner, you can still have a salary from a company.
Great. And one final good question that is probably a good one for everyone is, does an LLC help with separating yourself from your business for liability purposes? For example, if someone sues my business, do they sue me or the LLC?
Well, this is going to be a tricky question, because if they sue your company, they're gonna sue your company. However, if you're 100% owner on that company, you're still going to be dragged to the case, which is not. I mean, people sue every day, but that doesn't mean that it's going to be always right to sue you. So there are a lot of rules and laws that can protect your company as well. So I wouldn't be worried about.
Okay, great. Thank you very much. And we've got some other questions in the queue, but we will get to those a little bit later.
Okay. I'm sorry, my page is frozen.
There you go. I think that's where we left off.
Yes. Okay, sorry about that. So we have to complete the discussion point number 1 in the participant guide. If you all have your page ready on 14, I believe, there is a discussion point number 1 for federal income tax forms. So let's say number 1, it says my business is such and such, and I will need federal tax form to complete my taxes. Using the IRS website or a search engine, find the federal tax form you'll need for your business. So if you can discuss that, if you put your name, and then it depends what kind of company you have, then you'll need a form, but you have to go to the IRS website first to get that information and then keep it for a record. Employment taxes and forms. Federal employment taxes. These taxes include taxes employers are required to withhold from their employees' wages and taxes the employer pays. You need to manage payroll accurately to compute and collect the appropriate taxes. Then you must pay those taxes to appropriate agency on a monthly, quarterly, and annual basis. Employment taxes vary, so depending on the type of the business, location, and other factors, starting by registering a new employer with the IRS and new state employment department. The common federal employment tax forms you file for employers are employer annual federal unemployment tax return, which is a form 940, and then employer's quarterly federal tax return, which is a form 941. This form 940 is a form that you should file it annually. This is for employees who paid more than $1,500 to any W2 employee, or had at least one employee for 20 weeks of the year. So if you have an employee, let's say you have 1 or 10 or 20 employees who you paid like more than $1,500 for, let's say for 20 plus weeks, then you have to file 940. And this is quarterly, just the 941 is a quarter federal tax return. Other forms, so employee withholding W4 form. This is for employee. This is, you have to give this to your employee to determine the number of the exemption, if they have exemption, or if they have, an dependent, or this is only for employees. This is very important for all employees, because some of the employees might have 2 jobs. And this we're going to help the employees to actually withdraw less taxes. If they have 2 jobs, they have to claim 2 jobs. And then they have to claim and complete the W form for 2 jobs in order for them to have a nice tax bracket. So if the employees don't complete this form correctly, then IRS is going to automatically put them in different brackets, which is going to be a very high tax bracket for them, that they're going to pay a lot of taxes for no reason. Wages and taxes, we all know W2 form. This is going to show the income taxes withheld for the full year, each employee. And then miscellaneous income form 1099 miscellaneous. This is more like if you have additional income. This form is for more if they have incentives, or if they have any kind of income that is not including W2, this is going to show here. state, county, city income taxes. We have state and local taxes as well, we know. State, county, city income taxes, permits, licenses, fiction name permitted, doing business as, and state sales taxes. For the state, county, city income tax, this one is most states collect state income tax for individual and business. Permits, its local jurisdiction can require special permits depending on the type of the location of the business. License, of course, all the often require a business to purchase a business license. Some of the businesses does not require all of them to have a license, but if you sell something that needs to be licensed, that you have to have this too. Fixtures business name permit, also called as a DBA. That means that doing business as. A lot of companies use different names to do businesses not as their name. So always when you use a DBA, you always have to put the first name of the business that is the business you're using it to do business, and then DBA after that, and then the name, the old name. And this is always gonna show your business as it is. So if you have a DBA, you always show your name with DBA. So in that case, they know that you have different name too, because if you go with one name, then they might know you, what you're doing with the other business. So you always have to have that DBA on your name on the tax returns, or if you have filed a state of information, when you register the business, you also always have to have a DBA. State sales taxes. This is only if you sell retail products. Most states require you to collect state form from a customer for the state. Sales taxes is governed by state law. So know your taxes obligations. Your form of business determines how you pay income taxes and pay as you go. So this is one of the questions we had earlier for quarterly payment, the quarterly taxes. So here we go. So the estimated tax payments are made during the year and are used to pay income tax and self-employment tax. If you do not pay enough, you may be charged a penalty. So this is very, very critical because sometimes you don't know if you file your taxes correctly or if you paid enough, or the IRS is very, very bad, let's say, for giving you a penalty, because the penalties are really, really high. So you don't want to have that, and you try to avoid by filing it correctly, because you don't want to pay more because it's going to be a penalty. Penalties are really bad for the business. So you just have to be careful. Quarterly estimated payments. If you are filing as sole proprietor, a partner, as corporation shareholder, and or self-employed individual, you generally have to make estimated tax payments through the year if you expect to owe taxes of $1,000 or more when you file your tax returns. A corporation that expects to owe taxes of $500 or more when filing its return must make an estimated tax payment. Use IRS Form 1040-ES to calculate your estimated taxes. Typically, business owners pay estimated taxes to the United States Treasury quarterly based on a profit to date. Federal income tax and self-employment tax are paid quarterly in a combined payment by April 15th, June 15th, September 15th, January 15th. Most states require quarterly estimated income tax payment as well. To calculate your taxes will depend on your tax year. This is generally the calendar year, but could also be a fiscal year, any 12-month period that ends on the last day of any month except December.
Huda, can I interject for a few questions? Would this be a good time?
Yes.
Okay, great.
Yes.
So we have one from Jennifer, and she's asking, do we need to file 1099 payments to the IRS or state? If so, then to who?
1099, is that for business or for employee?
That's a good question. Jennifer, maybe you can clarify on that through the chat. Business. So again, the question was, do we need to file 1099 payments to the IRS or the state for business?
Yes. Yeah, if it's income, you always have to actually file it. Any form you have for your business, you want to make sure you're including it, because if it's income, IRS will require you to add that as an income. Sometimes people have like cash income, and IRS will want that as well, even though you don't have form. But not necessarily you always have to claim if you don't have proof. So for cash instance, if you have a cash instance, you don't have to show it on your tax return because they're not gonna never know that, but they want to know that too. So anything that causes it in income for your company or yourself, you have to always include that. I know it doesn't sound great, but this is what it is. IRS wants to know everything, and you might be very careful if you are self-employed, because IRS audits each person every year. So they have a radar for self-employment tax returns that are filed, because they always go there and find something that people maybe they don't know because they're putting a lot of expenses. So they got caught a lot and then they get penalized. So if you're self-employed, you have to really be careful, because you're going to be audited by IRS, and it's not going to be very good because they just want to find something on a self-employed. We as a personal tax return, when we file a personal tax returns, we get audited every 2 years. So every 2 years, if they don't call us, that means that we're fine. But for self-employed, it's every year. So every year they audit people. And so you just want to make sure you're putting everything there, because if they find a way something that you did, let's say this year, they're going to go 5 years backward. And that's going to go 5 years audit on your tax returns. And if they find something more, they're going to go 10 years. So, and then that's going to be a big penalty. There are a lot of people that I know, when they got audited from IRS as a self-employed, they got audited really bad for 10 years, and then they got a lien on themselves because they didn't pay taxes correctly for 10 years. And IRS find out 15 years later. And so they got a big penalty. So they will file a lien against you. So I just don't encourage you to not, tell them what you have, especially with forms. So if you have any income, just report that.
Like you said, it's not ideal, but it is what it is, and you don't want to be on the other side of that.
Yeah, no.
No. And it sounds like that would be true not only for individuals that own a business, but also for the filing, of course, for independent contractors.
Yeah. Yeah.
Okay.
Yeah,
right.
Because independent contractors are supposed to be a self-employed. So yeah.
Great. Okay. Well, that ominous music playing in the background probably will lead right into the cost of not paying your taxes. So I'll let you continue.
Okay. Thank you. Cost of not paying your taxes. Never use payroll taxes for working capital during cash flow shortage. So this is more for, of course, businesses. It's not personal tax returns, but it's important to establish a system for managing your money for tax obligation. Taxes are generally due monthly or quarterly, and you need to have the money in the bank when it's time to pay. Business owners sometimes make the mistake of spending their tax money on a business operation. When taxes come due, they are short on funds. First, as mentioned earlier, find out what taxes you owe, when they are due, and estimate the amount. In other words, if you have your quarterly taxes done and you see that you have a lot of revenues, but the expenses are low, that doesn't mean that you have to spend more because you have a lot of revenue. So I encourage you to not use the revenues right away, but save that money for the taxes, because you don't know how much it's going to make the IRS pay you taxes above that. So, I mean, a lot of companies try to use that cash because they did so good in the first quarter, but then second quarter, they use all the cash that they needed. Now they don't have money left to pay the taxes. So I encourage you to take advantage when you have revenues. Just save that money for now until you're done with the second, third, and fourth quarter. There are a lot of surprises after you file taxes because businesses are very high tax brackets. So the taxes are going to be really, really high for the tax business owners. So for you to have less taxes is by having you a lot of expenses. But like this says, that to not use the payroll taxes for working capital during the cash flow shortage. Yeah. Money management for taxes. Know when, what, and how much. Save for taxes, separate accounts. So this is more like giving you an idea to know when, what, and how much. So if for income taxes, you need to set aside a percentage of your net profit to pay quarterly tax estimated. Tax estimated are usually, you can estimate your taxes that let's say every quarter, let's say $800. So you put that $800 aside and just leave it for your quarterly taxes. And then if you are a retailer, you need to set aside the sales tax you collect on each sale. You can pay it to the state sales tax agency. For employer and employment taxes, you need to set aside your portion of Social Security taxes and the tax you have withheld from your employee paychecks. You can use separate bank accounts to set aside. You can use your business account software to keep track of the funds so you know how much is available for operations and what is off limits, because if it's reserved you to pay your taxes. Accounting system. In the accounting system, to reduce deduction, bookkeeping, business account software, cash versus accrual accounting methods. To reduce tax profits, you can deduct many business expenses such as rent, utilities, inventory, advertising, website development, and such and such. To be deductible, a business expense must be both ordinary and necessary. An ordinary expense is one of the common and accepted in your field of a business, trade, or profession. A necessary expense is one that is helpful and appropriate for your business, trade, or profession. An expense does not have to be indispensable to be considered necessary. You always check with IRS website and an account to learn what you can and what you cannot deduct from your sales to determine taxable net profit. I'm not sure if one of you can go to IRS website and have a form. I believe they do have a form there. I'm not sure right now for the business, but there is deductible page that IRS gave you, what you can deduct from your tax returns. There are some deductible items that you never put there. I mean, you can still put it there if you want, but it's not a good idea to file as it is. And then when IRS got on your file, then they see that you shouldn't include that in your expenses, and then they're going to audit you and they're going to call you in an interview. So there are forms that's going to tell you what to not and what you can deduct. I do have personal tax returns deductible sheet, and if one of you wants to know about the self-employment, I can share that with you. It tells you what kind of medical or mileage or food or stuff like that that you can deduct on your tax returns that are taxable. But for the business, I'm not sure. You might go to IRS and see that, because this is very important to know what you can deduct and what you cannot, because you can deduct anything you want because you don't know which one is right if you never went to IRS website. But I encourage you to go and just have a knowledge what you can and what you cannot, because they look at that. They look a lot of deductions, because that's how it's gonna lower your tax, owing a tax to the IRS. So if you have more deductions, then it's gonna have less for you to pay the IRS. So if you don't have much deductions, then you pay more taxes to IRS. So I just encourage you to go to the website and see what you can and cannot. Like I said before, you can have a good bookkeeping system that tracks all income and expenses. Your bookkeeping system should consist of tools to document the business sales and expenses. You can use a business accounting software program to help you track and organize income and expenses. You don't have to have a company. You can do it by yourself, like I said earlier. It just depends what you want. But the accounting bookkeeping system, if you don't want to pay the accounting company, and you can do that by yourself. Yeah, and the IRS has a lot of information about that. If you just can, go and search at the IRS website, they have a lot of information how to create a company file and with the software, and they can give you it's like a video you can actually see. They can give you a lot of information on it. Two reports that are particularly useful are the profit and loss statements. So for the business, you have balance sheet, which is going to show your assets, and then for the income, profit and loss statement, that's more for how much you have revenues, how much you have expenses. So it's going to show the net profit on it. So this is the report that you should have it for your business. This always shows the income and expenses of the business for a given period of time. And the balance sheet is the assets, liabilities, and other equity in the business on a given date. So these reports you should have quarterly and then annually. So you always have to have these reports ready for your company, because in that case, when you have these reports, it's more like a picture of your business, how you're doing on the sales and expenses. You can control more expenses, and you can actually see how much you're making profit of it. So by the end of the year, the annual one is going to be more finalized, which is going to show you all the numbers for a full year versus a quarterly, but then you can compare quarterly numbers with the annual numbers. So this is for a bank. When a borrower wants a loan to our bank, we always ask for a business balance sheet and the profit and loss statement. So if they want to be a first-time borrower, we always ask for 3 years CPA prepared, or if you have internally prepared, that's fine with us. And also we will need the business tax return. So that means that we have to see how you control your expenses internally, and then how you control your expenses when you file a tax return. So that's like a picture for us to see how you can, how you are using your expenses, how you are using your cash flow. So this is very important. I will encourage you to have this quarterly and annually if you can, because this is going to help you a lot. It's a big picture of revenues and expenses. And then all this information is good to keep it on your all documents, keep it for your records, because this is very important if you want to go and do any, let's say for 3 years, a picture of your business and see how you did the first, let's say 2018, 19, 20, 21, so you can see a picture of how your business is growing and what you did wrong like previous year, so you can see a picture, big picture. Oh, I have a lot of expenses there. Now this year I have to minimize it, or I have less revenues. What it caused that, So it's going to show you a lot of pictures, how to move forward in your business and how to be successful in the coming up year. Like I said, we have 2 methods of the accounting. How you can choose a cash accounting method or accrual. So cash and accrual, these are not so much different, but if you want if you choose a cash accounting, that means this is more for tax returns. So when you file a business tax return, it's going to show on the top. It's going to show, is it a cash accrual or it's a cash accounting or accrual accounting method. So it's going to show in your tax returns. Cash accounting is recognize the revenues and expenses only when the money leave or enter the bank account. So that means that when you pay your expenses. So the benefit of it is simple and shows how much money you have on hand without paying your bills. And then you only have to pay taxes on the money you've received rather than on invoices you issued, which can help cash flow, but not all businesses are allowed to do this method. Accrual accounting, this is business recognized income as soon as they raise an invoice for a customer, and when the bill comes in, it's recognized as an expense, even if payment won't be made for another 30 days. The benefit of this method is that you have more accurate picture of business performance and finances for a long term. The downside of this is more work because you have to do a lot of invoices, not just your bank account. So it's more work for the accrual. You can choose, it doesn't have much difference. It just depends on you if you want to report your taxes when you paid or when you pay your invoices, or if you don't pay your invoices. It depends on you. It doesn't go wrong or right, each one. It's almost the same, but it depends on your company how you want to report your revenues.
Tuta, would this be a good time for a couple of questions based on the last several slides? Great. So first one, what is the mileage standard deduction for your car when you drive for your business?
I have to double check because they changed this year. They added more this year because not very many people are traveling, and so in order to have to go to the customer, I think they maximize it, but I have to double check. Give that person my email address and I'm gonna email her the exact number. I don't want to say it right now because I don't have it on top of my head, but I do have a note for that because they're trying to see, when we trained, they try to see if they can follow up, change that number, because we are not yet to file our tax returns until April. So we are still pending on that, but I can follow up on that because that's very important to know because it's changed this year.
Okay, great. I will put your email contact information in the chat, and then that way people can reach you if they have additional questions afterwards as well.
Yes.
Let's see. And someone asked, I run a daycare. In terms of setting aside money for taxes, what percentage should I set aside?
Daycare. So is that a business?
Yes,
The daycare business.
a daycare business, correct.
How to put, can you read it again? I'm sorry.
Yeah, so this kind of goes back to the slide about, planning for taxes and setting aside funds for that. And her question said, I run a daycare. What percentage am I to set aside to plan for taxes?
What percentage?
That's a
I'm
tough
not
one.
sure.
Yeah, is there a standard percentage or
Yeah.
are there some general guidelines no matter what type of business you have or what kind of income?
It just depends on the business. Again, I mean, it's always a good idea to put more than it should, but I would say maybe around 10%, at least start with 10%, but it might be less or more. I'm not sure, but starting with 10%, that will be something that I would do, but I'm not sure how the revenues are and how the expenses are, what's the net profit on it. So I'm not that very sure to give a number.
Okay. Well, I'm putting your contact info then, and then maybe Lizbeth can give you a little bit more detail specific to her business. That'll be helpful. Let's see, Allie asks, I'll be hosting an intro to bookkeeping class through MCSE next week if anyone wants more guidance there. So that's very helpful. And also follow up from Elizabeth. Let's see. So this is in regards to the daycare business as well. I've never taxed parents, so I have to pay 100%, but I don't know what that is.
As a dependent?
Yeah, I think this is in relation to the children that are coming to the daycare. I think Lizbeth, what I'll have you do is reach out to Todd directly on both of those questions. I think those are pretty specific and likely to need a little bit more detail so that we can help you out. Let's see. And there was one more regarding health savings accounts. Let me scroll back up very quickly here. There's a question regarding, let's see, what about self-employment for health account deduction? I thought there was maybe some other information related to that. Let me see if I can find that, and then I will, and then I can follow up and ask a little bit later.
Yeah, I can share a copy of what should be deducted in the self-employment. It's like a sheet.
Oh, great.
It tells you on the left side what you can deduct, and then
Okay.
on the right side is going to tell you how you can deduct and you can't. So yeah, it's very helpful, and I can share that page with all of you. That's something that while I was training, because I'm supposed to be trained every year from IRS to be recertified. So they gave us that material that we always follow when we file a tax return, because we don't want to put something that we shouldn't have it in the tax return and deducted it. So that's like a very nice source of, I love it personally. So I always have a copy with me. That change every year. This year changed a lot because of COVID. So I can share that with all of you.
Okay, perfect. That is a good resource. And I think that will address a couple of the questions that we do have in the chat. Great, thank you.
Yeah, you're welcome. So we covered this using accounting. It's very important for your company. Either you want to do the taxes and then financials by yourself, that's fine. You can have a software, or if you want to hire an accounting person to do your taxes, just make sure to have all the information for the account, because these are very important. So financials for your business is going to be very important. If you want to have a loan, a business loan for your company, the bank is going to ask you for your financials and the tax returns, which if you have a business and you don't have time for those, you can have an account person, and then she will have it or he will have it for you when you apply for a loan, which is going to be very, very helpful for the bank to make a decision on your loan. but make sure it's a qualified, because some of the accounting person, they're not qualified, so just make sure you find the right one, not just someone that cannot do a good job on your financials, because that's very sensitive for your company. Services business accounts offer: business consulting, personal financial advice, information on organizational structure, financial information audits, review or audited financial statements. So business consulting, some of accountants have many years experience working with the business owners. They can provide insight, examples, information to help you grow your business. There are a lot of businesses, that they benefit from that. So if you find the right person, it might help your business grow more, because they can suggest things to you, tell you what you're doing wrong in your financials, what you're using your cash correctly. So they can help your business a lot. Personal financial advice and accountant can help you understand how to set up a retirement plan for a home purchase, or navigate a change in your personal circumstances. Legal formation, as discussed earlier, there are several legal structures for the business. An account can provide information on the options available for your state. Your accountant also refer you to an attorney who can provide you customized advice and assistance in your business information. Also, financing: if you need a loan to grow your business, like I said earlier, an experienced accountant can help you determine what type of financing is appropriate, what you can afford, deal structuring advice, and refer to loan sources. So they can give you idea what you can and what your business are willing to repay the loan. So they can give you advice, but I would suggest you to also find a source directly. If you want to finance for your business, you can also reach out to the bank, and they have a lot of relationship managers that they can help you, give you an advice and give you more options what your business can handle, or based on your financials. So it's a combination. The account can help you too. Audit: should your business get audited, your account can help provide information and explanation to the auditor. So if you got audited for some reason from IRS, then the accounting company can actually deal with that issue, because they know what's going on with your financials. So it's very, very, very important for your company to have that help, because sometimes you might not have more knowledge about the accounting, so that can help you move forward. And reviewed or audited financial statements. So most small businesses won't even need reviewed or audited financial statements, but occasionally for outside investment or incorporation, a business owner might need reviewed or audited financial statements. Only certified public accountants are qualified for this service. So reviewed or audited financial statements as a bank, we only require this to have for big businesses, versus small businesses, we don't require this. It can be internally. Just if you have something quarterly or annually, we will just accept it. So yeah, audited are only for big companies. 5 key points to remember: get qualified advice, learn your business tax liability, income, employment, self-employment, sales, and social. Set money aside to cover your taxes and avoid coming in funds. Have an accounting system in place to track income and expenses. An account can help you manage your business. So these are the 5 key points to remember. So taxes seem very complicated to a new business owner, but you can still do it. Invest time in learning, ask questions, and get qualified advice. It will become a part of your routine as a business owner. Alrighty, so I would like to summarize. If you have any other additional questions, or what have you learned? How would you evaluate the training? I would like to know if someone has more questions. I know there are some questions to follow up, but I promise I'm gonna respond to you as soon as I have your email.
So I think we've got just a couple here. Let's see. Any recommendations for accounting software, and any recommendations for resources on how to learn QuickBooks specific tax planning?
Yeah, so I don't have recommendation. It depends on the company size. I do not have any name for the accounting. Unfortunately, I apologize. I do not have any, because different businesses use different systems. So I would just recommend you to go, and if you have an accounting, you can go in and just have a consultation with any accounting company so they can give you more information on it. But also you can go to IRS website and see what they can do for you, because they help you find the right software for your business.
Great. And there was a comment from one of our attendees that said, definitely a great idea to spend some time on the IRS page. And that is from experience. So great resource there. Can tend to be a little overwhelming or convoluted when you first log on, but that's because there's just a lot of information there, and hopefully you can navigate through that.
Yes. If you have a business that is incorporated, you just go to that section, and then they're going to give you a lot of information. If you have an LLC, they're going to have you a lot of information. Also, when you establish your business, it's going to be in California state. They're going to have your business established there for a public. So it's going to show when you establish your business, and it's going to show your information on it. So that's important too. And they give you a lot of information there too. I can give the website actually here in chat if you allow me.
That'd be great. So if anyone has any additional questions, or any question that maybe you submitted but we have not gotten to, now is the time to put that in before we wrap up. Tuti, any other final comments on this last slide?
For sure. This is the business that we search, the corporation name or LLC. So these are the business. This is the website that California have, and this is the source for everyone to search their business. And they can give you all these how to file a statement of information here. If you have a business that needs to be filed, so they're going to give you all the instructions here. I can share this website with all of you. This is for the public, by the way. So yeah, these are the forms here. File corporation statement form. So let me see here. Tax information too.
I'm also including a chat, a direct link on how to request a consultation from MCSE with one of our consultants on, tax planning or any other topics of interest. And I'm not seeing any additional questions. Oh, one last question. Is there an accountant in the area that you recommend? And Tuta, I don't know if you can do that, or if maybe others that are on the webinar today, if you have any recommendations, maybe you can place them in the chat for Norma's reference.
Are you all from Central Coast?
The majority are. We do have some from outside of our county, but the majority are from San Luis Obispo County.
Mm-hmm. There is a big accounting company that a lot of businesses use there. It calls Glenn Burdett.
Glenn Burdett. Mm-hmm.
It's very popular out there. They have so many companies that help. So yeah, they have that accounting, but you can go and just have a very short consultation with them. I know that they're going to give you a lot of information, and if you don't want to be part of it, you can actually take their advice.
Mm-hmm.
I've seen a lot of business companies that they use that. So yeah, it's very, very common and populated. Actually, it's very populated.
Fantastic. Well, thank you, Tuta. This was excellent. For those of you who do want more general help for your tax planning or any other subject related to business, we encourage you to contact us for our no-cost one-on-one consulting with one of our experts. And as was mentioned in today's presentation, you should also rely on the qualified advice of your own accounting professional, because that is a good investment for your business. You will receive a link to today's workshop in the coming days. And for all of our previously recorded workshops, please visit the Women's Business Center's library on our YouTube channel, which you can also access from our homepage of our website. And I will put that link in the chat in just a moment. We also have some upcoming workshops that you may be interested in. So coming up, more financial focus with bookkeeping for small businesses on Tuesday, January 8th. Fantastic, Allie. Motivation, women's self-empowerment, a great way to start off the new year on January 20th. The entrepreneur's journey, the power of saying yes. That should be a good one on the 25th. And then introduction to QuickBooks for small businesses on the 27th. We have a workshop in Spanish, which is on the basic principles of computing. So if you do speak Spanish or know someone who does that would be interested in this subject, please send them our way. That is the first time we'll be offering this particular workshop, so it should be great. And then finally, we do have an Explore, Design, and Launch information session coming up, because our 8-week training course begins on February 1st. The information session is for an hour on the 25th. And we have revamped the format of this training course. It is going to feature an 8-part series on everything you need to know about starting and growing a business. And then it will be followed by 4 mentoring sessions. These will be roundtable sessions that will match you with your peers that are at the same stage of business as you are, so that it provides number one, a networking opportunity, but you will also hear from some experts that will be guest speakers every week to help you learn more and answer your questions. I'm going to put up our contact information one last time so that you have that at your fingertips. And as we close our workshop today, we want to thank you for being here, and thank you, Tuta, for your excellent presentation today. We wish you a wonderful day and the rest of your week, everyone. So happy New Year, and thank you for joining us.
Thank you.